Hey everyone, and welcome back to the Finance Zone. A lot has been said about the AMC stock. A lot has also happened. In January, its stock price got a huge boost from Reddit-inspired traders buying up shares of struggling companies, most notably brick-and-mortar video game retailer GameStop. During the trading frenzy, former controlling shareholder Dalian Wanda Group of China reduced its stake to less than 10% of AMC shares, the company disclosed. The world's largest theater chain, AMC Entertainment, has put a number on the damage the COVID-19 pandemic has done to its business. AMC Entertainment Holdings, New York Stock Exchange AMC, no longer has a controlling shareholder. As of March 3rd, Chinese conglomerate Dalian Wanda Group reduced its stake in the theater operator from almost 38% of outstanding shares, giving it 64.5% of the voting power, to under 10%. That means AMC will be run just like other publicly traded companies that have a number of shareholder owners. In attempting to raise cash to remain afloat during the COVID-19 pandemic, AMC conducted several at-the-market equity offerings, which is where an agent sells stock on behalf of the issuer at prevailing prices directly into the market. The offerings served to dramatically dilute Wanda's controlling interest far below the 30% threshold. That was when Wanda began converting its Class B shares into Class A stock, which carry a single vote per share. AMC's report painted a bleak picture of the state of the theatrical film business during a brutal year in which much of the industry was closed and Hollywood delayed its biggest movies over and over again. With all that's happened last year, AMC theaters lost $4.6 billion last year. Why is its CEO so happy? Now, he said the company is turning towards next year, when it hopes to benefit from a possible surge in moviegoing. Theaters are hoping for new blockbusters to play in the coming weeks as cinemas reopen. Nonetheless, challenges remain. The release date for Marvel's Black Widow is set for May 7th, but Universal pushed F9 back a month to June 25th. Other movie studios have moved their films forward on the schedule, including Sony Pictures' Peter Rabbit sequel. AMC has avoided bankruptcy multiple times during the pandemic by raising money from Wall Street. The company said it now has more than $1 billion in cash on hand. The theater chain also permanently closed 60 lower-performing theaters, 48 domestic locations, and 12 international cinemas. Shares of AMC are up 365% so far this year. The stock closed at $9.85 Wednesday, down 68 cents or 6.5%. The company managed to take advantage of the surge by selling stock and slashed its debt. The company in January completed an at-the-market stock offering through which it raked in $579.8 million in capital. Also, in January, the company converted $600 million in senior notes held by private equity firm Silver Lake into stock, which the investment firm promptly sold to cash in on the rally. The debt insurance and possible stock sales have so far kept AMC from bankruptcy, but the moves haven't been kind to long-term shareholders. The company's stock sits roughly 60% lower from the year-ago period, joining travel and leisure companies as some of the hardest hit by the pandemic. Leaves us wondering, are we finally in the good news cycle for AMC Entertainment stock? It's been nearly 6 months since Cineworld closed its 543 Regal theaters in the US, as well as all of its movie houses in the UK and Ireland. MGM's decision at the time to push the theatrical release of James Bond's No Time to Die into 2021 was the final straw in a vodka martini that was shaken, not stirred, for Cineworld. Now it plans to open select theaters in time to screen Godzilla vs. Kong on April 2nd. It'll ramp up its reopening schedule to have more theaters open by the time Mortal Kombat hits the big screen 2 weeks later. Seeing its largest rival fire up its digital film projectors and popcorn makers again may seem like bad news for AMC Entertainment Holdings, New York Stock Exchange AMC, but it's actually the opposite. AMC needs competing multiplex operators open for movie studios to justify releasing films in cinemas instead of directly to consumers through a growing number of streaming services. Cineworld's restart is good news for all exhibitors, and it's not the only thing going their way. Still, AMC houses a lot of risk and could be in for a bumpy ride. While it's true that the pandemic fears may persist and keep people away from theaters, we finally have a vaccine. In late January, AMC's shares spiked as the ticker was picked up by a new breed of social media traders whose stated motivations were to undermine the market dominance of perceived Wall Street insiders like hedge funds. The sudden pop in share price gave some investors an opportunity, and Silver Lake Management LLC saw a particular opportunity to turn a prior deal with AMC into quick cash. That private equity fund in July 2020 scooped up $600 million in convertible senior notes that AMC issued to survive pandemic closures that extended beyond expectations. During the January meme stock surge, Silver Lake converted those notes to AMC shares, a dilutive event in itself, and sold the entire holding for $713 million. Double-digit interest rates became standard for AMC as it negotiated with its lenders through 2020. Gearing its balance sheet for short-term survival, much of the senior debt issued in the pandemic period carried coupons at or above 10%, with one $100 million senior issuance completed in the first weeks of 2021 carrying a variable rate of either 15% or 17%, depending on payment types. That compares to three 2018 issuances of $600 million each in 2024 senior debt that carry a modest 2.95% coupon. Would you then consider AMC stock as a buy? Volume is important for an AMC short squeeze. As more and more retail investors get in on AMC and continue to hold, we're going to keep experiencing the stock price rise. Because volume is such an important factor, retail investors and institutions will need to not only buy the dips, but the gains as well. While many investors like to look for momentum in stocks, this can be very tough to define. There is a lot of debate surrounding which metrics are best to focus on and which are poor quality indicators of future performance. In order to see if AMC is promising momentum pickup, let's examine some momentum-style elements to see if this movie theater operator holds up. Looking at a stock's short-term price activity is a great way to gauge if it has momentum, since this can reflect both the current interest in a stock and if buyers or sellers have the upper hand at the moment. It is also useful to compare a security to its industry, as this can help investors pinpoint the top companies in a particular area. While any stock can see a spike in price, it takes a real winner to consistently outperform the market. Shares of AMC Entertainment have increased 96.33% over the past quarter and have gained 63.21% in the last year. In comparison, the S&P 500 has only moved 2.3% and 22% respectively. Investors should also take note of AMC's average 20-day trading volume. Volume is a useful item in many ways, and the 20-day average establishes a good price-to-volume baseline. A rising stock with above-average volume is generally a bullish sign, where a declining stock on above-average volume is typically bearish. Right now, AMC is averaging 135,392,976 shares for the last 20 days. Over the past 2 months, two earnings estimates moved higher compared to none lower for the full year. These revisions help boost AMC's consensus estimate, increasing from negative $37.89 to negative $35.86 in the past 60 days. Looking at the next fiscal year, two estimates have moved upward while there have been no downward revisions in the same time period. Volatility is normal in the stock market. We've seen a lot of volatility in the market recently. If you're a new investor, chances are you might have been scared off to sell and then notice the stock slightly go up again in the green tier. Don't feel bad. Volatility in the stock market is normal. This doesn't just apply to AMC stock. Reasons why AMC stock is going up. Large institutions such as Wells Fargo, Vanguard, BMO Harris, Charles Schwab, Fidelity, and BlackRock are buying the stock right now, via CNN Business. AMC CEO Adam Aron announced bankruptcy is officially off the table and has raised $2.2 billion in cash this new year. Because AMC is currently the most shorted stock, via MarketWatch, the stock price has gone up and will continue to go up as long as retail investors keep buying the stock. Ladies and gentlemen, unfortunately, MarketWatch has removed AMC from their list. Retail investors suspect foul play from this hedge fund partner. AMC is currently the most held stock, surpassing Apple, AAPL, and Tesla, TSLA, via NASDAQ. Why are large institutions buying AMC stock? Speculation would point out AMC is possibly a good investment, contrary to what Yahoo Finance, The Fool, and other resources are leading the public to believe. It is important to note that these institutions are purchasing millions in AMC stock. Just a side note here, if AMC isn't a good investment like some sources are pumping out, then why are large institutions buying while the stock is low in price? Thank you for watching, and remember to check the description and use my WebBull referral code for 2 free stocks.